Grab your popcorn. This is a good one. It's loaded and it's all about crypto and taxes. And again, giving credit where it's due. This came from the Practice Advisor CPA account that's vetted, that has a lot of good information. So I had to share it in a way that you can digest it, understand it, and then elaborate on it, especially if you're in the world of crypto and understanding that crypto is not just the present, it's also the future. So even if you're not in crypto currently, you will be, and this may benefit you. And share this with somebody else who you feel may benefit. That being said, let's dive in. So should you report cryptocurrency on Factor Form 8938? So as it has become a more common asset among your average investors, these folks have had many questions about the tax implications of investing in cryptocurrency, or virtual currency as it also is known. So the answers can be somewhat complicated. Now, over the past decade, cryptocurrency has gone from being, of course, an obscure form of technological investment to being bought and sold on its own exchange, and even used to pay for goods and services by some individuals and large corporations, as it has become more common asset among your average investors. So people have questions, and the answers, like they stated, could be somewhat complicated. So situations involving cryptocurrencies held in foreign accounts or exchanges can even be more tricky. And there's not always a straight answer from the IRS. Now, there's pros and cons to it not being a straight answer, because if it's ambiguity, meaning that it's kind of broad, it's kind of unknown, then it gives you some wiggle room, versus if it's set and clear. So just kind of make note of that and do what you wish with that information. Now, this article runs through the basics of certain situations. It cannot be substituted for legal expertise of a CPA or a tax attorney who has reviewed the specifics of your problem. And I'm not a CPA, nor your attorney, or none of that. I just tend to understand tax deductions, tax codes, and benefiting from them. And with the area of crypto being a new space, it's important for us all to be educated in this area. Now, I'm not going to bore you with what is cryptocurrency, because obviously if you watch this video, then you know what cryptocurrency is. You know about Bitcoin. You know about the blockchain to a degree. You know about certain meme coins and things that may have some type of use case or utility. You know about these things. But they're wondering if crypto can be considered to be foreign. And if it's a foreign entity or foreign thing, then does it fall under the FATCA rule, basically? Does it have the same FATCA tax reporting requirements? So let's talk about what the FATCA tax reporting requirements, and this kind of gives you an understanding of whether or not crypto should fall under that, and why they're considering putting it under that tax reporting requirement. So under a Foreign Account Tax Compliance Act, which is FATCA, U.S. taxpayers who meet certain thresholds of money and assets in overseas or offshore bank and financial accounts are required to make a disclosure each year on Form 8938. So this is not a new form just specifically created for crypto. This is a form that's been in place that they're considering using for crypto, saying, hey, this falls under that bucket. So they try to figure out different ways to, tax you. I'll just say that. For unmarried couples, the threshold is $50,000 or more on the last day of the tax year, or more than $75,000 at any time during the tax year. For those who are married and filing a joint return, the threshold is $100K and more on the last day of the tax year, for more, or $100,000 or more on the last day of the tax year, or more than $150,000 at any time during the tax year. If you're married and filing separate income tax returns, the thresholds are $50,000 or more. So instead of knowing all of that, let's get down to the nitty gritty. So Form 8938 must be attached to your individual tax return if you're using this, and it must be by the same due date, including any extensions, things of that nature. So if it's April 15th for you, or you had an extension because you were overseas, then same rules apply. The IRS imposes different thresholds for different filing statuses and for taxpayers living abroad. Determining the maximum value of cryptocurrency in US dollars, particularly with volatile markets, can be tricky, because crypto is moving right now, like up and down, up and down, up and down. It could be very tricky. So I don't know if they can treat it the same way as they would treat a typical foreign asset. But conservatism on valuations is often advisable to avoid underreporting. If an basically meaning that being conservative with your numbers is often helpful. So just giving yourself a little bit, like overestimating or underestimating, could have some benefit. So if an exchange does not provide a traditional account number or address, the IRS typically permits you to list your login credentials or note an unknown address. If you're unsure whether you must disclose on Form 8938, it is always best to reach out before filing to an experienced tax attorney or CPA. And if you need access to some tax experts, then it's a link below, and they position you to maximize your refund legally, but also put you in a position to where you're not overcharged in certain fees. So link in the description below. Specified foreign financial assets. So FATCA focuses on specified foreign financial assets, which generally includes both foreign financial accounts and foreign non-account assets held for investment. Examples of such assets include, but are not limited to, that's how you broaden the detail or whatever you're describing, including but not limited to foreign stock and securities, foreign financial instruments, contracts with non-U.S. persons, interest in foreign entities. If these assets meet or exceed FATCA's value threshold, you must disclose them on Form 8938. So that's how they're boxing the crypto into that particular world. So must cryptocurrency be reported under FATCA requirements? FATCA applies to all foreign assets. So the question becomes whether a personal account or a foreign crypto exchange counts, or in some other foreign financial or banking institution counts as a foreign asset. Now, this is off the record, and I will say this or create a video about this. They're talking about, and this is good, they're talking about having it to where the US-based crypto is tax-free. That would make things a lot more simple. They're just looking at it like, hey, we're going to make our money on the back end in some way, shape, form, fashion. But if it's a US-based crypto that adds value to the economy, adds value to America, why not consider making it tax-free? So that's something that is being discussed. So tax experts and lawyers have made arguments both ways, but the IRS has given no clear answer or directions. While they have not officially said that crypto wallets or accounts on foreign exchanges count as foreign assets, so it's still in the air. They also have never said for certain that they do not count. So what are you going to do? You're going to assume that they do count and do whatever, or you're going to assume they do not count and do whatever, but it's unclear. So you don't want to assume at all if it's not clear. As such, attorneys and CPAs are likely to advise you to disclose this information. They're likely to do that because they kind of got to cover their own behind and say, hey, let's just do what we feel is best. So let's just be safe. That's typically how they operate, which I understand. So they just want to be safe, like I said, to prevent any potential headaches down the line. FBAR and FATCA, key distinctions for foreign held crypto. So FBAR, FinCEN Form 114, traditionally applies to foreign financial accounts holding cash or cash equivalents exceeding $10,000 in the aggregate. Currently, the regulations do not explicitly consider a crypto-only account to be FBAR reportable. So currently, they're not considering it to be equivalent to someone who's holding cash or cash equivalents exceeding $10,000. However, FinCEN Notice 2020 basically signals a plan to amend the rules so that purely crypto-based accounts will become reportable under the Bank Secrecy Act. So they're making adjustments, making changes. You let me know what you think about that. In contrast, FATCA focuses more broadly on financial or foreign financial assets, potentially encompassing foreign held crypto. If an overseas crypto account also holds fiat currencies like euros or dollars, a hybrid account, then FBAR obligations likely already apply. So if it already holds fiat currency, foreign exchange currency like euros and things of that nature, then it already likely applies and you may be already familiar with it. So taxpayers should watch for further updates to confirm new reporting requirements, significantly since non-compliance with either FBAR or FATCA can trigger steep penalties. So the high stakes consequences of not filing Form 8938, and this is just based on what the original rules were. before adopting and incorporating crypto, which is definitely more volatile and, moves up and down. And that's why people love it. Volatility is, sometimes beneficial because it looks at it like, hey, yeah, it has the ability to go down rather quickly, but it also has the ability to go up rather quickly. That being said, even if the rules around cryptocurrency reporting seem ambiguous, failing to file a Form 8938 when required exposes you to significant risk. Here are some of the key points to consider. So basically, this is something that has already been in place for the foreign accounts. They talk about an immediate penalty. So taxpayers who omit 8938 are subsequently notified by the IRS face an initial penalty of $10,000 if you fail to submit the form within the designated period, typically 90 days after notification. This penalty can increase in additional increments of $10,000, potentially reaching a maximum of $50,000. So nobody wants to do that, but I know they're trying to come up with rules and regs and control. It's all out here. Control. All of the regulation is a representation of control. So I'm not really a fan of that, especially in the world of crypto, where crypto was designed to create some level of freedom. Yes, it has benefits to have some type of regulation. So, certain things don't happen. But, trying to tax everything is un-American. And, that is a whole nother conversation. So basically, this means that the IRS retains the authority to audit and assess additional. So let's talk about the extended statute of limitations. So when a Form 8938 is not filed, the statute of limitations for IRS audits on that tax year does not begin. This means the IRS retains the authority to audit and assess additional tax liabilities for that year indefinitely, prolonging your exposure to potential enforcement action. So they're looking at it like, if it's not filed, then we can prolong and assess additional tax liabilities for that year indefinitely. That's heavy. That's heavy when it comes to that 8938 for foreign accounts. So I'm hoping this crypto doesn't end up falling in that bucket once they go through all of the regulations, or US based crypto would be tax free. I'm looking towards that, because that would change the game in so many areas. So increased accuracy penalty. If an audit later reveals inaccuracies or underestimates or understatements in your reported foreign assets due to the omission of Form 8938, the accuracy related penalty can jump from the standard 20% to as high as 40% of the underpaid tax. This can significantly compound your overall financial liability. Limited professional expertise. Many CPAs, tax preparers, and accountants may not fully understand the intricate requirements of Form 8938 because it's still new. It's still ambiguous. It's still being unpacked and discovered. Even this article, and this comes from Practice Advisor, they're letting you know some things are very unclear. So, especially as they pertain to the complexities of cryptocurrencies and other foreign assets, this knowledge gap increases the likelihood of unintentional non-compliance. So, we still don't know. Even after understanding and reading this, it's still unknown. And, it could cause unintentional non-compliance, leaving you vulnerable to severe civil and criminal tax penalties. Potential criminal tax exposure in cases where non-compliance is deemed willful. The failure to file Form 8938 can also trigger the IRS CI criminal tax investigations, potentially leading to more serious consequences beyond civil tax penalties. So in short, overlooking or delaying the filing of Form 8938 not only subjects you to hefty fines and protracted audits, but also leaves you with indefinite exposure to IRS enforcement actions. Timely and accurate compliance with Form 8938 is essential to protect yourself from these significant risks. So that's a lot. Let me know what you think about it. I know it's still unclear, but they're looking at it like, hey, if you just overlook it, this could happen, even though it's unclear. And that's kind of a level of control that I disagree with. So let me know what your thoughts are below. I just had to share this just to kind of raise awareness so you can be aware as the world of crypto is here and continues to grow over the upcoming years. That's all I got for this one. Mr. Smith signing out. Salute.